everyone. I'm Franz Price, Portfolio Manager at Capital. After a strong 2021, this year has been very challenging for global markets as we continue to witness a worldwide sell-off. A sell-off fueled by an increasingly aggressive rate hike trajectory by the US Federal Reserve, following the highest US inflation figures in over 4 decades. The invasion of the Ukraine by Russia is causing additional uncertainty and market volatility, as an increase in the oil price would lead to further inflationary pressure. The inter-fund decline in returns is in line with global indices such as the Nasdaq, and not as a result of a deterioration of the quality of the underlying investments in the funds. Our conviction of the suitability and caliber of our investment holdings remains unchanged. Given the recent market movements and developments, I'd like to share some thoughts and insights with you. Drawdowns and volatility are part and parcel of equity investing. The correction that we're experiencing now isn't new. It's happened many times before and will happen many times again in future. From 2010 to 2018, there were 6 instances where the S&P 500 had drawdowns exceeding 10%, yet each time it recovered and reached new highs. There's no reason to believe that this won't be the case again now, although the exact timing of a full recovery is nearly impossible to determine with accuracy. It's also important to note that this is a correction, not a recession. Company earnings growth remains strongly underpinned by structural economic growth drivers like low unemployment, high wage growth, and high inflation. Another encouraging fact is that the average bull run is longer and much larger than the average bear market. The average bull run returned 263% over a period of 71 months, while the average bear market declined by only 33% and lasted 14 months. The Russian invasion of Ukraine will lead to devastation, but stocks will likely be able to withstand the geopolitical struggle. Looking back at other major geopolitical events throughout history reveals that equity markets usually take them as relative non-events. But that's not to say Russia's actions in Ukraine don't complicate matters in the shorter term, particularly in terms of rising energy and agricultural prices. Higher oil prices could be a factor, but energy has a more muted or neutral effect on the economy than in past decades. Finally, certain value sectors such as energy, telecoms, and utilities have outperformed growth sectors like technology and consumer services since the start of the year. In the long run, however, these sectors that are currently outperforming have delivered the worst returns over a 5 to 10 year period and are not the sectors that we prefer to have long-term exposure to. Also recall how the technology stocks were the first to bounce back from the pandemic-induced sell-off in 2020. Any effort to gain short-term exposure to such so-called deep value sectors would, for us, carry no long-term conviction or justification. We invest our own money alongside yours and follow the same investment philosophy and long-term buy and hold strategy. In times like these, where markets are declining amidst high uncertainty, investors often feel the urge to do something, to attempt to stop and reverse losses. Staying invested and doing nothing is also an action, a very powerful action and particularly effective in successfully navigating market declines and subsequent recoveries. Attempting to time the markets, in other words, selling to avoid further losses and buying once markets start gaining again, tends to be unsuccessful due to transaction costs involved, possible capital gains tax liability on the sale, and the general inability to accurately time the actual sales and purchases themselves. We continue to closely monitor market developments and assess its impact on our underlying investments. If anything, we'll capitalize on the opportunity to purchase additional units in our underlying investments at depressed prices. In conclusion, yes, market declines are unpleasant, at times even painful, and can be very unnerving, but they're also temporary. I hope that the points I've shared with you have illustrated this, and that the key is to remain invested. As always, please feel free to reach out. We look forward to engaging with you. Thank you.